Al Rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 15th of the 3rd to Friday the 19th of the 3rd 2021. I've written up the weekly flows to get us underway. We're going to start this video to save time as we write up. Right, so the weekly flows from the 15th to the 19th then. Euro dollar minus 45, which means over that period the euro dollar as an FX pair lost 45 points or pips. Euro yen minus 69, euro pound 0, pound dollar minus 50, pound yen minus 73, and dollar yen minus 17. If we look at the actual flows then, we've got a positive opposed driver in the yen at plus 159. We've got front and back door flows, mainly going, the negative opposing flows going out of the pound at minus 123, next out of the euro at minus 114, and the dollar was the positive rock at plus 78, and that was on activity of plus or minus 237. So we're going to stop there, don't go away, we'll write up the daily flows. Right, welcome back. We've written up the daily flows, so let's make a start then. So Monday the 15th, we had a positive opposed driver in the dollar at plus 45, front and back door flows, mainly coming out of the euro at minus 31, next the pound at minus 28, and the yen was the positive rock at plus 14, activity plus or minus 59, pretty low activity. Tuesday, we got a positive opposed driver in the yen, plus 106, front and back door flows, mainly coming out of the euro minus 90, next out of the pound at minus 18, and the dollar was the positive rock at plus 2, activity plus or minus 108. Wednesday then, we had a negative opposed driver in the dollar, minus 168, front and back door flows, mainly going into the euro at plus 149, into the pound at plus 123, and the yen was the negative rock at minus 104, activity plus or minus 272. Thursday then, we had a negative opposed driver in the euro, minus 149, front and back door flows, mainly going into the dollar at plus 107, next into the yen at plus 93, and the pound was the negative rock at minus 51, activity plus or minus 200. Finally, Friday, we had a negative opposed driver in the pound at minus 147, front and back door flows, mainly going into the yen at plus 82, next into the dollar at plus 66, and the euro was the negative rock at minus 1. Activity was plus or minus 148. So things to notice here before we rub it off and do the analysis then. So we've got basically no unopposed drivers during the week. We've got opposed drivers. We've got relatively low activity Monday, increasing to a peak on Wednesday. And if you remember, Wednesday was the Fed meeting and rates decision, and Thursday is starting to come down again. So right, and then you've got sort of the dollar driving Monday, the yen positively driving Tuesday, the dollar negatively driving Wednesday, the euro negatively driving Thursday, and the pound negatively driving on Friday, the last trading day. So we'll stop it there, rub it off and do the analysis. Don't go away again. Right, welcome back. We're going to start talking about the analysis. Just to remind you then what's happened over the week. We've got a positive opposed driver in the yen at plus 159, and a negative secondary driver in the pound at minus 123. So over the week then, the 15th to the 19th, the week we've just had, we've had a strong yen driving the market. The bulk of those opposing negative flows have come out of the pound, and the euro and the dollar have been holding the fort in the middle. Right, so what's been going on? Right, so Sunday, which was Sunday the 14th, we had the Royal Bank of Australia RBA Governor Lowe speech. Basically, they praised themselves for being a great government and took down the Australian dollar, which was fair enough from their perspective. Right, Monday then, the 15th, we had positive China retail sales. Tuesday we had soft US retail sales. And Wednesday we had soft CAD CPI. And also late on Wednesday we had the Fed rates decision and subsequent minutes. Right, Thursday then, the 18th, we had positive Australian employment data and we had the Bank of England rates decision. Friday the 19th, the last day of the trading week, we had soft AUD retail sales and positive CAD retail sales. And looking over the horizon a little bit, Monday the 22nd, we've got China rates decision. Right, so the theme from that basically was you're getting a lot of relatively soft retail sales, which is to be expected given the lockdowns due to the COVID virus. You've got some rates decisions in there, which we'll talk about in a minute, and basically you've got China still punching away on the up on the data cycle. And incidentally, we're doing this sister video later on this morning, which will fill in some of the gaps. It's our version of the economic calendar. It's the complex data cycle for the period the 15th to the 19th. Right, so if you look at our trades then, we're about plus 900 points in profit, and we're long AUD dollar, we're short NZD via the euro, the pound, the CAD and the AUD. So that's what we're doing. Our peak has been about 1150 to 1200. Our floor, obviously before we, not including when we put it on, but the recent floor has been about plus 500. So you've had about a 650 point swing on these trades, and we're at about plus 900 now. The other thing that we had on Friday was the quadruple witching, which obviously shakes things up a little bit. That's the rollover of the 90-day option contracts. Right, so that's what we're doing. So if you look at the general macro stance going forward, you've got the dollar, which the Fed has basically said they're going to allow the US economy to run a little bit hot. They're not looking to touch rates till about 2024, but we'll see. So the dollar is likely to have a soft downward trajectory. Likewise with the euro. The Lagarde basically was at pains to try and talk the euro down. Their sort of open market operations are aimed at bringing bond yields down and all the rest of it. So if you give the euro a neutral to soft, and then the yen is obviously linked with the equity cycle. And really, there's no reason for the JPY to start appreciating. So it's likely you're going to see a soft yen. So they're the majors. So what's that telling you? That we've got flows out of the dollar in macro terms, out of or neutral in the euro, and out of the yen via the equity transmission. And what are we left with? Well, in the majors we're left with the pound, and we're left with the commodity currencies, the CAD, the AUD, and the NZD, and then the Swiss is a subset of that really. So the pound, if you remember, the pound is operating, it's the lowest complex in terms of complex positioning. It's about 27% from the model floor. So the pound has plenty of elbow room to come up from these opposing negative flows, which will be then positive into the pound. So not only is it the most logical place for it to go, it's also got the most elbow room. Excuse me again. Right. Regarding the commodity currencies, the CAD and the AUD. The CAD is often linked to the oil market, and AUD is often linked to China. Now, clearly we've got, and if you look at the data cycle, which we're going to talk about in the next video, the key going forward is that if you've got this low, weak, soft dollar environment, that's very beneficial to commodity currencies as well. And you've got a China growth story. It all points basically to a favourable pump in the CAD and the AUD. The NZD is a little bit more problematic, but then if you remember, it's operating in complex terms at 67% from the model floor. It's already pumped. It's already basically been there and done it. So the AUD and the CAD are likely to outperform the NZD, even if you get this this basic scenario going forward. So that's where we're at. And the Swiss franc, well, the Swiss franc is actually at the top of the tree. It's operating at 70%, sorry, of the model floor. So the Swiss franc has far less elbow room to go up, and as we know, the Swiss central bank is not keen on any further appreciation, particularly if it starts wandering away from the euro exchange rate, which has a great bearing on the Swiss economy. So where are we then? So you want to be basically you want to be long the CAD, long the AUD, and long the pound, and you want to be short these really. So in theory, that's what's going to happen progressively. Is you're going to get flows out of the dollar, semi out of the euro, out of the yen, going into the pound and into the CAD and the AUD. A little bit of NZD strength possibly, but it's been there and done it. It's relatively going to underperform, and therefore that's why we're shorting the NZD to these. And if you look at these individual FX pairs in terms of their positioning, they're operating at about so on a scale there you've got 0 to 9. The NZD is 7 to 7.5. I could write 7 to 7.5 from the top. So these pairs, Euro NZD, Pound NZD, CAD NZD, AUD NZD, are absolutely pumped. So logically, the only thing to do is to be positioned where we are, sit it out, and let the money roll in. Hopefully, so that's what we're doing. Hope that was useful. Try and catch the sister video, which is the data cycle one, which fills in some of these gaps and talks about a few different issues. If not, we'll see you Monday for the daily briefing. Thank you very much.